We are in a transition period in the Austin marketplace. We're moving from an ultra strong seller's market to a seller's market. This is what we've been waiting for. The insane appreciation is not sustainable. 60 offers on a home is not sustainable. Offers 15 or 20% over the asking price are not sustainable. We have a record level of listings that we've seen in April for quite some time, but pending sales are down and solds are down. Let's talk about why that is. There are four main reasons why we're seeing a shift from an ultra seller's market to a seller's market. The first is new builds. The second is inventory. The third are interest rates in the stock market. And the fourth is property taxes. The record number of listings this month is predominantly new construction, and new construction is filling the void that has been left by a decline in resale. New build closings are up 11% for the month of April, while resale is down 12%. So last year at this time, we only had half a month of inventory, meaning if nothing else was listed, everything else on the market would sell within 2 weeks. Well, now we're at zero point 0.8 months of inventory, which is a big increase. And like I said, it's due to new builds. But we're seeing that decrease in sales volume because new construction takes longer to close. Something to understand is that we are still in an ultra low level of inventory. And according to economists, we won't see appreciation stop anytime soon because of the high demand that we still have in Austin. And again, that ultra low inventory. So let's talk about interest rates. We're seeing that buyer pool diminish slightly because of the rise in interest rates. Stock market declines have also removed a second tier of buyers. Think about it. If you were planning on funding your down payment with stock and now that stock has declined, you might not be able to purchase the home even if you qualify based on income requirements. With a smaller buyer pool, homes are sitting more than 2 or 3 days and might make it through a weekend. The last piece of the puzzle is property taxes, and these are a wild card until October. We've heard a lot of experts saying that more investment properties are going to hit the market because investors aren't protected by a homestead and they might not be able to make the rent make sense based on their rising property taxes. We've seen that homeowners' proposed assessed values have gone up significantly, but again, proposed, not confirmed. But just because those proposed values went up doesn't mean Austin's budget can go up. That's capped at 3.5% a year. Some experts say individuals with homesteads, not investors, might pay less than they did last year, but we'll have to see how that all plays out in the fall. Here's what to consider moving forward. We still have very low inventory, and the speed of those homes flying off the shelves might slow down, but appreciation won't stop. Because of property taxes, we will likely see investors raise rent, and we may see more inventory because investors are looking to cash out in the fall. The percent homes are going for over list price is on a downward trend. A smaller buyer pool is driving that down. If you're considering selling, we're still in a seller's market, but working with a realtor is more important than ever because pricing is key. If you're a buyer, you might see shorter lines at open houses and homes sitting through the weekend, but it's not fair to say you won't be in multiple offers, and competition simply is still there. Have questions about the market? Please reach out. I'm more than happy to discuss your real estate goals.